What's going on with SoFi stock? The stock is down almost 85% from its highs in 2021. And if you're watching this video, you either own the stock or you're thinking about adding it to your long-term growth portfolio. This video today, we're gonna break down SoFi. We're gonna look at the pros and the cons, the bear and the bull case, the headwinds and the tailwinds. And I'm gonna show you what's going on with the stock. We're also gonna look at a chart. I'll tell you where I think the stock could be headed next. This is SoFi stock analysis. Let's get started. All right, SoFi, let's break it down. If you're an investor, a potential investor, this is gonna give you everything you need to know about SoFi, okay? Let's get started. So it went public in June 2021 via SPAC. Now, of course, all SPACs are SPAC. These are under a lot of scrutiny, and this one in particular is a Chamath SPAC, and there's just not a lot of good sentiment right now in the market, especially with SPACs, and especially with stocks like SoFi, they're considered potentially meme stocks. The question is this a meme stock, or is this a legit company that could give you significant returns if you hold it for the next 5 years? And that's what we're going to look at here today. Shares are down about 85% from their high point in early 2021. Now, of course, the stock can be down 85% and it can still go down another 50%. It can go to zero. We're going to look at a chart later. I'm going to show you where I think it could go in some levels that I might actually add more shares to SoFi. Now, this is a digital bank. That means there's no physical branches. Everything is online. Their services include checking, savings, banking, peer-to-peer payments, investing. They also have cryptocurrency we'll talk about here in a second. Various loans like mortgages, student loans. We're going to talk about that and much more. So here are some of the headwinds. This is the bear case of why you wouldn't want to own the stock, why you might be short. And there's actually 11.23% short interest in the stock right now, so a lot of people are betting against it. Now, they were awarded a banking charter earlier this year in 2022. Now, generally that's good, but there's also some bad that comes with that. Number one, the market wants to value this like a bank. So it's using price to book. We're going to look at that valuation later. I'm going to show you where it's at. There's also some other issues like with cryptocurrency, which we'll also talk about here in a second. So student loans, their whole business was basically frozen by the US government. Now, it was supposed to be active January of 2023. Now, they just got hit with a double whammy, student loans and crypto. First is that this was extended from January of 2023 to June of 2023. So that business is basically frozen for another 6 months. On top of that, we had the crypto FTX collapse. Now, they're not directly correlated with the FTX collapse. However, it made senators and made regulators look at cryptocurrency with more scrutiny and actually look at SoFi, and we're going to talk about that here in a second as well. So SoFi digital assets, it's impermissible for banks. Now, they have a bank charter, so they're considered a bank. It's impermissible for them to have cryptocurrency. So SoFi was given 2 years to divest itself of that cryptocurrency division or get in compliance with the law. Now, during this period, SoFi was not supposed to expand or do anything additional with their crypto offerings, and they did a couple of things. The first thing they did, and this is where senators raised concerns, SoFi expanded their crypto offerings, allowing customers to invest portions of direct deposits directly into cryptocurrency without fees. In addition, they also expanded the number of cryptocurrencies offered, including Dogecoin. Now, with all that said, crypto is a very small part of SoFi's business. It's only $132 million, but it's a risk nonetheless. Add this with student loans basically being frozen until June of 2023, and you'll have a lot of poor sentiment in the market for this stock. Let's look at an article, look more at this cryptocurrency issue. Okay, so this is fairly recent, November 21st. US senators asked bank regulators to review SoFi's crypto listings. So SoFi got a letter and it expressed concerns about the company expanding its crypto business, how it holds customers' crypto, listings of Dogecoin, and so on. SoFi's digital asset, this is a quote, SoFi's digital asset activities pose significant risks to both individual investors and safety and soundness. As we saw the crypto meltdown this summer, crypto winter, where crypto assets lost over $1 trillion in a matter of weeks, contagion in the banking system was limited because of regulatory guide rails. That's what the letter said. In the event of crypto-related exposures at SoFi digital assets ultimately require its parent company, bank holding company, or affiliated national bank to seek emergency liquidity or other financial assistance from the Federal Reserve, FDIC. So this is the problem. Taxpayers may be on the hook. This is now FDIC because it has a bank charter and now it has more scrutiny than it did before. And this is going to be some growing pains. They're going to figure it out. It's not a big part of their business, but it is significant. It is a significant risk here. So SoFi replied. They said they take their regulatory and compliance commitments seriously. We believe we have been fully compliant of the mandates of the bank license. So this is going to be a battle back and forth. Cryptocurrency remains a non-material component of our business. We look forward to sharing the requested information with the senators in a timely fashion. They're saying they're under compliance. Regulators are saying they're not. This is going to probably drag on for some time. If you're an investor, a potential investor, this is something to be aware of. Now, here's some of the tailwinds. So if you're a bull on SoFi, here's some of the positives. positives. So fintech and digital banking, it's the future, and we know that, and they are taking market share. They're growing their EBITDA, they're expanding, they're taking market share from other banks while also increasing their net interest margin. They're doing very well. Their last earnings was very strong. The bank charter, the positive here is it allows SoFi to hold its deposits and loans versus relying on a third-party partner or bank losing a cut of the money. They essentially had to use someone else and pay them a fee. Now they don't have to do that, so it's more profitable for them. Student loans eventually will be back, likely in June of 2023. And then cross-selling. If you're already a customer of SoFi, you can expand into other areas of the business and get offered more services and cross-sell that way. I also think it's important to mention the SoFi Stadium brand awareness. Now, the Los Angeles Chargers and the Los Angeles Rams NFL teams both play in SoFi Stadium. There's also a lot of huge music venues and so on. That gives them brand awareness, especially with national TV coverage. And that's part of the reason why they continue to grow. Now, they're paying a lot of money for that, but I think it is a tailwind. It's a positive because right now they're in growth mode. So they're not profitable. There's no PE ratio. There's no dividend. They're in growth mode, and SoFi Stadium is part of that growth acceleration. So additional tailwinds, I'm going to show you some slides here on the growth and expansion, just how impressive it actually is. Now, before we move on, I need to announce this video is sponsored by The Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. And as a reminder, guys, Motley Fool does not tell me what to make, what videos to cover, what stocks to cover. They're a great partner, and check them out. You can also join us in our private community in our Discord. Visit patreon.com/firedupwealth. Now, looking at SoFi today, you can see the 52-week range 441 just happened on November 28th. The high 52-week range 1869. It doesn't have a PE ratio, it doesn't have a dividend, short interest 11.32%. Now this is the really big one, quarterly performance. We mentioned earlier about EBITDA, and on the right you can see this. This is really starting to accelerate the EBITDA, especially with that bank charter. In their last quarter, this is from the last quarter, the earnings were very impressive. Recorded net revenue of $419 million. That's 51% year-over-year growth, and you can see the acceleration here. These guys are growing members, they're growing services, and they're getting more profitable. Longer term, I like this one, but there are some risks that we mentioned earlier. Now let's look at the valuation, and let's look at a chart next. Now, if you look at SoFi by price to sales, it's 2x for 2023 estimates, which by growth stock metrics, that's fairly attractive, especially when it's growing 50% year over year, and it's expected to grow again significantly next year. Now, banks often use price to book ratio. I'm going to show you the valuation. I'm going to compare it to Bank of America here in a second. Price to book is a comparison of a firm's market capitalization to its book value. You calculate that by dividing the company's stock price per share by its book value per share. So price to book ratios under 1 are typically considered solid investments by value investors. So what is the price to book ratio for SoFi? So first, let's look at Bank of America and compare it to one of the biggest banks in the United States. Bank of America, price to book value as of today, November 29th, 1.235. So what is SoFi's? As of right now, today on November 29th, it's trading at 0.8167. So it's trading under price to book value by about 20%. In fact, this morning it was 0.79. Now again, it doesn't mean that it can't go lower, that it can't go to zero, but when you're looking for potential attractive investments, this is a solid number or metric to look at, especially if you want to compare it to other banks. This is trading at a discount of 30% to Bank of America. Of course, Bank of America has a PE ratio, it has a dividend, so it's not a direct comparison, but when you look just at price to book, SoFi is looking pretty attractive. All right, SoFi chart. You can see back here, January of 2021, February 2021, it was over $28 a share, got back to 24, basically 3 times got in that 24 to 28 range, and then fell off a cliff like a lot of growth stocks. Now, when we do chart day on Patreon, you can join us, patreon.com/firedupwealth. We do that every single Wednesday. We're going to do that tomorrow morning on Wednesday. We said on 11/23, November 23, that 4 to 415 is possible. First watch 425 to 450. It got right in that range. It was in the 440s. Today, 11/29. That's played out very well last chart day. I'm seeing continued pressure here when I look at the chart, when I look at the different oscillators, when I look at the short interest, 11.32% short interest. It's possible you see this previous S3, which is down here about $3.59. Not saying it has to happen, but I think it's a possibility. I think under $5, dollar cost average, that's been the message for SoFi for some time, but as it gets lower, it gets even more attractive. So if you're looking for, a great deal, in my opinion, if it breaks $4, to me, it's a no-brainer. To me, long-term, I think under $5 is a no-brainer, but it does have risks. It's not risk-free. Again, this trades at a 2x 2023 price to sales, and that's despite a strong forecast, approximately 34% is the estimate for 2023, and that's that's followed up by 50% growth in this year. If this was helpful, make sure you subscribe to the channel, click that bell to get notifications, drop me a like, drop me a comment. Appreciate your time and attention. Have a great rest of your day. Take care.